Yo, what's going on? This is Beck. Today we had a brand new video still on the stock market, talking about what is going on in the market and why it is so crazy and unpredictable, and the risks that you should be staying away from right now, based on what the market is rewarding right now. But currently we are seeing the stock market rewarding bad behavior, meaning all these people have come out and started day trading or stock options trading and doing those types of things. The stock market right now is rewarding people that are doing this, that are using bad behavior, bad tactics, and making money from it. So in the long term, people that continue to use these tactics are going to end up losing, thousands of dollars, tens of thousands, even hundreds of thousands of dollars if they continue to use their behaviors and tactics right now. And we can see in the market, the big things that are making it just apparent that bad behavior is being rewarded is companies that are going bankrupt and declared bankruptcy are ones where people are making 100% profits, in less than a day for trading this stock. People making that 100% in a day or two, and then continuing to make 30% a day on some of these companies. And that's just not how news works a lot. It's just not how you're meant to trade, is to get into bankrupt companies, as well as companies that are fresh IPO'd. And I understand IPO companies, they do have big bursts sometimes once they launch, once they get through their public offering. It does sometimes either burst up or down, and people can judge it from there. But we've seen one stock in particular called Nikola, or however you say that. It's the electric car company, kind of rivaling Tesla. And I think it might be an all right investment for the long term, maybe, depending on how things sort out. But I think Tesla has such a hold on like an electric car company market. Who knows where that company could go. But the reason it's just so crazy to see everybody getting into this and thinking it's such a good thing to get into is the huge run-up it had. It IPO'd at like 20-something dollars and then got up to 60, 70, 80, 90, and then started coming back down to the 60s, 70s areas right now. And the reason that is a problem for investors and traders who are doing this and making money by getting in companies like this is because this company has no revenue, no money made. It is all right now just speculative trading or people dumping money into it. And there is a much larger video on Meet Kevin's channel talking about this more in depth on why it's not a good company to be in, or the risks that come along with being in a company like this right now that is super speculative, and why you need to be kind of wary of it. Meaning, I'll go through a couple bullet points of his video. Basically talked about that there are PIPE investors, which means people who bought shares after they IPO'd. I forget what the PIPE stands for. I'm drawing a blank, but he has it in his video. But those investors were given 52 million shares or something, and an option to buy at $10 a share, and then that they could get in at. The owners of this company have 50-something million shares of themselves, and then the public, the only amount of shares that are floating in the public are like 6.2 million. So it's not a ton of shares that the public holds, meaning that if these PIPE investors come in and the price is $70 and they 7x their money, and they sell off their shares that they got, or parts of their shares, maybe they sell off half, they sell off 25 million shares. That is still a substantially higher amount than the 6 million in circulation right now, meaning it would just dump the price and it would just not be good. And the owners obviously having substantial shares as well, somewhere around 50 million or something like that. And they could dump their shares at some point when they want to take profit. So if PIPE investors come in and dump half their shares at $60 to 6x their money, and that'll bring the price down. And then if the owners or founders dump some of their shares, to raise money for the company to be able to start production and stuff like that, because they're going to need money, it would dump the share price even further down, as well as he goes more in depth on something that I've never even heard of or thought of like bonds types deal that you can buy for the right to buy shares of Nikola at 5 years from now at $22 or something like that. So I've never seen stuff like that, but there is a lot to be worried about with companies like this that are purely speculatively trading. So with the market acting as irrational as it is and as volatile as it is very easy for people to think they are knowing what they're doing and think that they have a grip on some sort of tactic that they are using to make money, either day trading or option trading, when in reality it's just pure dumb luck that they are making any money at all. And the fact of the matter is that they are just putting in money at the right times to kind of see a run up, and it's just not what is growable or sustainable. So even though maybe they make some money, maybe even say you make $10,000 day trading off of $1,000 right now, getting completely lucky. You know, you're buying Hertz, the bankrupt company, riding that up. J.C. Penney's bankrupt, you're riding that up and selling, and you make all this money, and you think you're doing the right thing. So next time when the stock market's healthy and economy is healthy and everything's going right, and you see a bankrupt company, you put money into it, and you think you're going to make a bunch of money, but it continues to drop and you lose money. And then that cycle happens where you think that the companies that used to make you money or the tactics no longer do, and then your trading starts to demolish, because it is a lot easier to lose money day trading and trading in general than it is to make money, especially when you're being rewarded for bad behavior right now and then continue it on a amped up scale with more money in the future. So what is the fix to this, you might ask? And it is something super simple that everybody who is involved in investing or talks about investing here on YouTube, anything, they will always tell you to invest in the long term and always look forward to the long-term future and not be looking forward to tomorrow or trading, especially not at first. So when you look at companies that you want to get into for the long term, like Apple, Microsoft, index funds, these big blue chip companies, Disney, McDonald's, these types of companies that are been established, have been around, have been here for 40 years, aren't going anywhere. Those are companies that you would want to have your money in to wait for the long term. Even if you lose money in the short term in this super volatile market, you can always look forward to the long term, because they are companies that are proven that they can do business, make money, and stay relevant and around in a market, because they've done it for the past 40 years plus. As well as you can buy index funds like VTI or VOO, which is S&P 500 index fund, or a total stock market index fund, which will diversify your money across many companies. VTI is about 3,000 companies, something like that. And then obviously the S&P 500 is the S&P 500 companies. So in just buying that one index, you'll diversify your money across all those companies instead of having to pick and choose companies, as well as come up with the money. Maybe you want Apple, Microsoft, and these big tech companies, Facebook, Google, but those shares can be pretty pricey. Google well over $1,000, so it can get a little pricey if you want to do it that way. These obviously index funds, less expensive, as well as paying dividends, as well as just showing the decent growth that they have year after year as long-term investments is the way to go. So guys, that is about it for this video. A little bit of worriness to be aware during the market and with the market that we are in, and make sure that you are not putting your money in risky things right now because of volatility. Maybe you get involved in trading, make a couple money, make a little bit of money here and there, but make sure if you're doing that to learn the right ways to do it. Even if you are making money off of the bad behaviors and tactics right now, try and be aware that that's the reason why it's just rewarding bad behavior right now, and try and stay away from it in the future. But I would probably stay away from trading right now. And maybe you want to get into it and try it, I wouldn't risk any more money than you're willing to completely lose, because that is a big chance, especially if it's your first time involved in the stock market with anything. If you want a foolproof way, is just invest long-term, buy blue chip stock companies and index funds, and you should be on the right path as long as you're holding long-term, and you should be able to see, you know, your portfolio grow over time instead of trying to force it to grow quickly in a short duration, which is much harder to do. But let me know what you guys are doing if you're interested in day trading or options trading in the market we're in now, or if you are holding any stocks long term. And don't forget to comment, smash the like button, smash the subscribe button. We're on the path to 1,000 subscribers. I'll see you guys in my next video.